This is ACC Amit Kumar and we'll discuss IAS 41 Agriculture. The Standard on Agriculture was the last standard published by International Accounting Standards Committee in 2001, in February 2001, and after it, the responsibility of issuing standard was handed over to ISB. So there is no standard known as IAS 42 or 43. After it, the standard name began from IFRS 1, IFRS 2, IFRS 3. So there was no standard on agriculture because there was a lot of confusion in the industry of agriculture where they were recording it as an asset. Some of them were recording biological assets as part of their assets, some of them recording them as part of their expenses. So this confusion was eliminated by the issuing of the standard on agriculture, which said that the biological assets, now what are biological assets? Biological assets are living animals or plants, and agriculture produce at the point of harvest. So this word is interesting, at the point of harvest, because till the time the wheat plant is standing and the grains are with the plant, till the point of harvest it will be considered as an agricultural item, living animal or plant, till the point of harvest. After it is harvested, the grains, after they are harvested, they form part of inventories. So inventories get their value from the standard on agriculture at the point of harvest. So at the point of harvest, when we are taking the grains out from the wheat plant, those grains till the point of harvest are under IAS 41 agriculture. After the point of harvest, they become inventories, IAS 2 inventories. So if they are standing in the field, we are into a commercial activity, they form part of IAS 41 agriculture. If it is harvested, after the point of harvest, it becomes inventories. So it's a journey. So we need to be very careful about what is belonging to inventories and what is belonging to IAS 41. Like a sheep is a living animal, and if there is wool on the sheep, till the wool is on the sheep, it will be forming part of IAS 41. The moment the wool is cut from the sheep, that cut wool is forming part of IAS 2 inventories. A tree which is standing is forming part of IAS 41, but if it is cut into logs, lumber, then it forms part of IAS 2 inventories. So is the reason the point of harvest becomes very important to understand that what is the point of harvest. Another interesting feature which they have introduced is bearer plants. Bearer plant means fruit bearing plants. The fruit bearing plants are not in existence for a period of 6 months, or they do not get consumed within 1 year. They may serve us for 5 years, they may serve us for 10 years. So it was debated that when they are going to serve us for more than 1 year, why are we considering them as part of 1 year activity? Why are we not treating them as part of our property, plant and equipment, tangible assets? So there was an amendment in IAS 41 which stated that fruit bearing plants like rubber trees, palm trees, all these are going to give us fruits for a longer period of time. They form part of IAS 16 property, plant and equipment, and they'll be valued under either cost model or revaluation model. Revaluation model only applicable if there is an active market exists. Normally cost model, they'll have a maturity period depending on the life of that tree or plant. Even tea bushes form part of IAS 16 property, plant and equipment because they are going to give or serve for a longer period of time. This doesn't include animals in it. So animals are not part of property, plant and equipment. They continue to form part of IAS 41 agriculture. Now the interesting part is the fruit bearing plants are forming part of IAS 16 PP, but the produce from these plants will continue to be forming part of IAS 41. Produce means the tea leaves. After you have plucked the tea leaves on these tea bushes will be forming part of IAS 41 because that is considered as an agriculture produce at the point of harvest. After this tea is plucked and churned, it forms part of IS2 inventory. So there's a journey. Within the same plants, there are three models applicable. The tree which is standing is to be recorded under IS 16 property plan and equipment. The agricultural produce on it, agricultural produce on it will be under IS 41. The fruits, mangoes, apples, they'll be forming part of IS 41 agriculture. So this standard looks easier, but it requires a lot of comprehension when we are doing it or implementing it for the first time into our commercial agriculture activity. What if we have animals in the zoo? Will they be forming part of IS 41 or not? Animals in the zoo. Will you consider them as part of IS 41 agriculture or not? Any idea? Anyone? Any idea? They are not. Animals in the zoo are not for commercial activity. The caretakers are not interested in biological transformation and do not specifically focus on gaining out of it. Earn by the change. What is the change? The change is that the animals which we are rearing for commercial activity, suppose cows are 1 year old, 2 year old, as they grow in age, they not only increase in terms of quantity, but they also increase in terms of quality. Sheep, there were 50 sheep last year, but this year we have 75 sheep. There were 50 sheep which were 1 year old. There are 75 sheep, newborns. The older ones have turned 2 years now. The newborns are 15 in number, 20 in number. We bought 10 from outside, which were 3 year old. So the biological transformation is happening not only in terms of quantity, but also in terms of quality. Biological transformation is happening not only in terms of quality, but quantity as well. So how to record it? How to record the change? How to record the IS 41 biological assets, agriculture produce? There are three things: biological assets, agriculture produce at the point of harvest. Agriculture produce at point of harvest. Biological assets include both plant and animals. I repeat, bearer plant amendment is only applicable to plant, is not applicable to animals. Animals do not form part of IS 16 property plan and equipment. Only bearer plants has this option of being recorded under IS 16 property plan and equipment if they meet the criteria of a fruit bearing plant which has a longer maturity period, which is going to serve the farm for a longer period of time. Don't confuse this bearer plant amendment with animals. And animals in the zoo are not for commercial activity, is the reason doesn't come under the scope of IS 41 agriculture. Wheat plant. There's a point at the point of harvest. Then they get converted into wheat grains. So this is a journey. Wheat plant IS 41. Till the point of harvest IS 41. After it is converted into wheat grains, it is IS2 inventories. Bearer plant, pea bushes, pea leaves, plucked pea leaves, pea bushes, IS16 PP, tea leaves, IS41 agriculture. After they are plucked, there are IS2 inventories. How to measure them initially? Initial measurement. And subsequent measurement. Is at fair value less cost to sell. And as I have repeated previously, anything measured at fair value less cost to sell, what do we do at the end of each year? Remeasure on each reporting date at fair value less cost to sell. Cost to sell is whatever we have to spend in terms of being able to sell the produce in the market. So they are living animals or plants, but we are measuring them at fair value less cost to sell. That what is the value at which they'll be recorded in the books. They are assets, biological assets. Agriculture produce at the point of harvest, biological animals. The cow grows in size, procreates, transforms, dies, also produces, also gives milk. So there are many qualities in which they transform, and an animal goes through a life cycle. So all that is recorded, whether that change is happening because of change in quantity. Even this is bifurcated in terms of change in quantity or change in quality. The fair value is divided into two parts. The total change is divided into two parts to give clarity on what resulted in change. Whether it was due to change in quantity or whether it was due to change in quality from year to year. Akash, in India, we didn't have a standard on agriculture, but all the companies which are private limited companies engaged into commercial activity are using the standard on agriculture. So this cannot be confused with the normal farmers who are producing it on their own lands. They are exempted from tax. They are not under the purview of the Companies Act. They are not mandatorily required to present their financial statements on agriculture. This is only being done by companies who are engaged into commercial activity, who does it for commercial purpose, are required to follow the guidelines of IS41 agriculture, not a farmer who is doing it simply because he's been doing it since his grandfathers did it or forefathers did it, and they're continuing with the practice, but they've not formed a company. If they form a company and they say that all their agricultural land will now be considered as part of the company, and if they do this agricultural activity, IS41 agriculture is applicable to them, not to a common man. Akash, is this clear? So earlier, when there was no standard on agriculture, they were using their own practice, like whatever they felt right was being recorded. Like as I said, many of them were expensing them, many of them were capitalizing according to whatever they felt was right as far as accounting of biological assets and agricultural produce is concerned. So to sum up, I would say that whichever entity has biological assets as part of their commercial activity, they are rearing these animals, they're interested in biological transformation of plants, they're interested in the growth, and they wish to earn out of it, they are required to follow the guidelines of IS 41 agriculture. So when to recognize the biological asset or agricultural produce, at what value, and how we'll record the differences between the two reporting periods. We'll measure them at fair value less cost to sell, we'll remeasure them at fair value less cost to sell. It covers biological assets, as I said, animals and plants. Does not cover land related to agriculture activity. So this land is belonging to IS 16 property plant and equipment. The land doesn't come under the purview of IS 41 because there is no biological change in land. Intangible assets related to agriculture activity, whatever we are using, any license we have got for using any land, or we have taken it on contract basis, so that intangible asset or agreements doesn't form under come under the purview of IS 41. IS 41 is biological assets if you are able to record the change in terms of quality and quantity, if it is a living animal or plant, or if it is agricultural produce, till the point of harvest is under the purview of IS 41. It's management by an entity of biological transformation. You're interested in the change. You are managing the change for sale into agricultural produce. You will convert it into agricultural produce. Now, agricultural produce is not only from plants. Agricultural produce is wool from sheep is also considered as an agricultural produce. Or into additional biological assets, they increase in size, they increase in numbers, like 350 sheep last year. This year we have 600 sheep, 500. We bought some, there was increase in number. The agricultural activity covers diverse range of activities, including raising livestock, forestry, cropping. So if there is a forest which is unattended, doesn't come under the purview of IS 41. But if we are specially undergoing this forest activity to convert this forest into logs or lumber someday, that covers under IS 41. It comprises the process of growth, degeneration, production, procreation that cause qualitative and quantitative change in a biological asset. Degeneration means it may decrease in value, as it ages, it may decrease in value, may not have that value when the horse was young, but as it is towards maturity or towards the ripe age, they may not be of the same value as they were. It's a living animal or plant. The harvested product of the entity's biological asset is the agricultural produce. So till the point of harvest under 41, after the point of harvest, IS 2. Now, harvest is detachment of produce from a biological asset or cessation of a biological asset's life process. The wheat plant has reached maturity. It is ripe now. We can cut it and we can convert that wheat plant produce into wheat grains. Whatever produce is there on the plant, it gets converted into wheat grains at the point of harvest. So till the wheat plant is standing in the fields, it is IS 41. The moment it is cut and it is converted into grains, it gets its value at the point of harvest, fair value less cost to sell. But after it is converted into grains, it is IS 2 inventories. Common features of activity are capability to change, management of change. You're also able to measure the change. Harvesting from an unmanaged source like fish from the sea, or as I said, forest from an unmanaged source, is not an agriculture activity, is therefore not covered by this standard. Fish, zoo, forest, unattended are not an agriculture activity. So this is the amendment which I talked about. Plant-based bearer biological assets, grapevines, rubber trees, oil palms, they are all covered under IS 16 property plant equipment, but agriculture produced from these plants continues to be recognized under IS 41 and IS 2, depending on at what level they are. Agriculture produce which is with the bearer plant is IS 41. The moment it is plucked, it becomes IS 2. Hope it is not confusing you and you are clear, because since I have repeated it many times, hope this must be clear till now. So recognize a biological asset when and only when you are able to control that asset. You know that it is going to give you future economic benefits and can be measured reliably. So this is normal definition of an asset, which is applicable to IS 41 agriculture as well. Initial measurement at fair value less cost to sell, subsequent measurement at fair value less cost to sell. There is no change. So we are not saying that initially measured at cost. That's the basic difference between this and other standards. It is initially measured at fair value less cost to sell, subsequently measured at fair value less cost to sell. Where will take the difference? Where will take the difference? Where we are going to record the difference between these two amounts. if fair value less cost to sell at the beginning of the year was 5,000, and if at the end of the year it is 7,000, there is a qualitative and quantitative change in biological asset, where we'll record this difference of 2,000 as part of P&L. Hope you know it now, that anything measured at fair value less cost to sell, other than the ones which are measured at fair value through OCI, we take the difference to OCI, but other than them, we take the difference to P&L. Agriculture produce harvested from an entity's biological assets should be measured at fair value less cost to sell at the point of harvest. So it gets its value at the point of harvest, and after the point of harvest, the same value becomes the cost of inventories for initial measurement. The same value, fair value less cost to sell at the point of harvest, after it is converted into wheat grains, becomes the initial cost of measurement for IS2 inventories. Fair value determination from active market. If you have active market, suppose you want to know the value of cows or buffaloes, there must be an active market for them. There are trade fairs for them, so we can get to know their values from there. If it doesn't exist, then the most recent market transaction price or market prices for similar assets. If you have a market for cows, we can estimate the market for buffaloes, or can have a sector benchmark, what others are doing, or can, on the basis of the expected cash flow from since birth till death, how much benefit we're going to have, can estimate it and can know the value in use. So the fair value principles, we'll discuss them in detail again in IFRS 13 fair value measurement. Any gain or loss will be recording in P&L, subsequently also being measured at fair value less cost to sell. The difference is being transferred to profit and loss. So in one sense, the standard is very simple, that we need to measure them at fair value less cost to sell. As far as accounting is concerned, from exam point of view, will be given the information. The only complicated area would be to determine whether the change is because of quality or change is because of quantity. I'll do a practice question with you on agriculture and it will be clear then. We'll not be getting into the details because this alone will take away the entire time. So I'll not get into doing a practical question on IAS 41 now, but we'll do a practice session with you so that you get to know the difference between how the change in terms of quality and change in terms of quantity is being measured. But for now, you can understand that it's simply being measured at fair value less cost to sell by the end of the year, being measured at fair value cost to sell. As far as P&L and balance sheet is concerned, they're fine. But as far as disclosure in the financial statement is concerned, we need to bifurcate it into two parts. If there's a change of 2,000 between the beginning and end of the year, this 2,000, how much of it is because of change in quantity and how much of it is because of change in quality of the asset. If received any government grant, we'll recognize as income when the grant is received if it's meeting the conditions. Conditional government grant, we'll recognize the grant only when we believe that all the conditions related to grant will be received. There's a lot of subsidies given for agricultural produce and for promoting agriculture in the country to meet the demands of the general public. So this also has a relationship with IAS 20 government grants. So if you are meeting all the conditions of agricultural activity, you may be eligible for a grant as well. How the grant is treated, it will be according to the provisions of IAS 20 government grant. We'll disclose the aggregate gain or loss during the period, a description of each group of biological assets, nature of its activities, methods and assumptions applied in determining the fair value, that how did you arrive at fair value, whether level 1, whether there was an active market, whether you looked for a similar asset, whether you observed the price, fair value less cost to sell. Now this is not net realizable value because we are not intending to sell here. We're simply measuring it at fair value less cost to sell. And this asset is growing in size. So there is no other way to measure it. We cannot continue to measure it at cost because this is growing in size in terms of quality and quantity. So we have no choice to apply that. We cannot say that we should use either cost model or revaluation model or fair value model. The only option left if we wish to measure it fairly is fair value less cost to sell, because it is changing, it is progressing, it is improving, it is growing, procreating, transforming, carrying amount of biological assets pledged as security. I took a loan and gave my 500 goats on loan to the bank as security, pledged as security. They'll not sell them until I pay back the loan. amount of commitments for development or acquisition of biological assets, financial risk management strategies related to agricultural activity, how you are going to cover the risk, if because it is all dependent on nature, and is it covered through insurance or not, how are you going to save yourself if it doesn't meet the criteria, if you don't get the produce which you're expecting, reconciliation of changes in the biological assets in the beginning and end of the year and reporting it. This is all about IAS 41 agriculture. If you have any questions, please ask.